What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and we got some exciting stuff to talk about. Obviously, Bitcoin got a pump up. Will it last? We'll take a look at that. If you guys were around for March 2021 when we started talking about the Wyckoff distribution, before it even topped out and it gave us our targets of what to look for coming back down. Many people missed it because they were waiting for $100,000 Bitcoin, and then they did it again later on. Let's take a look at what's going on in the charts. This is going to be a great video for you guys to watch, especially if you're looking for a trade setup. We will be going into the 4 hour towards the end. Also, at the end, we're going to be taking a look at gold, BNB, Dow Jones, DXY, all the good stuff. Make sure you stick around for the whole video. There's going to be a lot packed into it, and you're going to have a little clearer vision of what's going on with the markets after watching this. Now, I know a lot of people watch YouTubers and follow Twitter accounts that only look at Bitcoin. You need to look at the whole markets. We've talked about this for years on this channel, and a lot of people have learned to keep an eye on traditional markets because that is key. Bitcoin does not just do its own thing on its own. It is still controlled by the same people that control the main market. So let's take a look at what's going on. Make sure you guys smash that thumbs up. Leave your comments down below. Let's take a look at what's going on. So as you can see, I have the distribution schematic number 1 for the Wyckoff theory, right? And if we look over here, right here, you have PSY. What's PSY? Preliminary supply. So this is where you get your preliminary supply. And then you get your buying climax right here. As you can see, I have the lines drawn out the same. We need to pull that back up. Here we go. And then after that, you have the automatic reaction, right? Then you have your SOW down here, which is your sign of weakness, right? Where everybody gets extremely bearish. Then you get your huge push up right here. I don't know why I didn't have that in here. This should have ST. We're going to put that in here real quick. Let's put that in here. ST. And that's right here, right? Let's get that chart back up. So this is your secondary test right here. We did not quite make it all the way up, but as you can see, and I also have, you got your phase A, phase B, phase C, and phase D. I have that in here, these dotted trend lines, right? So again, our secondary test, then we have our sign of weakness down here. We get our big push up, just like right here, right? There's another schematic also after this. So this is the super bullish one, right? And that would get us somewhere around, let's move this over, somewhere around the 32 to 32.5 range. Actually 31.9 to 32.5 range. You guys that watch my previous videos understand that 31.9 is kind of a invalidation point for a 5-wave structure down. We still have a wedge structure if that does happen. But if we were to get a big spike up here, right? And like I said, there's 2 distribution schematics. This is the first one, right? If you do get that push up from down here from these lows and you get one more high, kind of like we did way back in 2021 and then again into towards the end of 2021, right? We'll take a look at that here in a minute. But after that, we come back down again to our automatic reaction, and then you have your last one, which is the up thrust after distribution. That would be this big, huge rally getting us up to that 31.9 to 32.5 range. Bounce around in here for a little bit, and then continuation down, right? This would be phase D over here, right? So LPSY, your last point of supply right here. Come back down, you go test that sign of weakness again, get another push up, and then you get another last point of supply, come back down for a test, and ultimately fail, right? Just continuation of the downside. As you guys know, if you watch the channel, this would take a little bit longer. This would take into the beginning of next year. As you guys know, Back in December of 2021, I was calling for the bottom to be in sometime in September, October, which is still possible because we are in October. If not, if it does play out like this, we could be going into the first quarter of next year. Now, is that a bad thing? Absolutely not. That just takes a little bit longer. Remember, guys, 2 years ago, I called the October, which I'm still sticking with. If it does fail, we go on a little bit longer. Does it matter? No, because we still get lower lows in the market. That is what I've been warning you guys of since back in 2021. I do believe we have much lower to go. I do believe it's a bubble pop pattern. Let's take a look at the next schematic. We're going to go into number 2, right? Let's pull that up. So here we are, same thing. You get your preliminary supply, right? You get down to your AR, right? Your automatic reaction. This is a little off. Your AR should, actually it should be right there. That is correct. Let me get this back up here. Okay. So on this one, that would mean the top is already in. You could still get a rally. It could turn around any point in here though, right? But if you did get a rally, it would probably only get up to about the 30,500-ish, making that 31.5 that we had been talking about for a long time, the top, right? So this is the next one. Still could get a little push up. It doesn't have to though, guys, because this could all just move down like this, right? And it be in the top, which there is a case for that. I'm going to show you in the 4-hour chart. But let's just say this is what happens still getting into the first quarter of next year, if this was to play out this way. But either way, you can see in the schematics, same type deal, guys. It does look like distribution to me. Pull the charts up, check them out yourself. Let me know in the comments what you think. Do you think it's distribution again? If you guys were around back in March when we talked about this for 2021 in March, the top, about a month or two before it happened, we did call the 64 top when we were down at like 55, somewhere in there, and it hit almost perfectly. And back then we were looking at both the number 2 and number 1 schematic. So if we get back up past this 31.6, then we're probably most likely gonna do this here and get one more little push up, get everyone super bullish because it breaks the high before continuing down, right? This is ultimately, if we look at the monthly chart, we have gotten nothing but lower highs and lower lows with a new lower low coming. Now, does this get extended into next year? Is that possible? It is possible. But again, nevertheless, still looking for much lower lows, guys. So be cautious. Now, there is a chance this could be accumulation. I'll go over that in tomorrow's video. I just wanted to get a quick video out this morning. I got a lot of people coming over to work on the landscaping today. So I tried to get this video out early. So if we put the fibs from this high to this low, right? Right now, we are battling with the 0.5 fib. Now, if it can't get back above this 0.5 fib and open and close a 4-hour above, then we're most likely coming down to that 27.575 and then continuation down and it's done. But in your bullish case here, for the smaller time frame, if you're able to break open and close a 4-hour above that 28.4, then you're looking for around the 29.2 to the 29.5 range, which is the golden pocket. Let's just put this right in the middle. Middle being 29.350, right? So now let's take a look at an Elliott wave count. As you guys know, I like to mix it up. Look at Elliott wave, Wyckoff, all that good stuff. By watching this channel, my hopes are that you learn how to know how markets react, what they react to, and how they work, right? I'm not just giving you calls. That's not what this channel is about. It's about learning to read the charts on your own to begin to trade. Oh yeah, before we go into this Elliott wave count, here's a word from my sponsor. Definitely check out PrimeXBT, by far my favorite exchange. They don't trade against you. Check them out.
Begin your path to financial freedom. Gain up to a $7,000 bonus on us. Register and use promo code Deposit and enjoy a 7% bonus. Available now. Link in the description.
All right, back to the Elliott wave count. But before that, make sure if you do use Prime XBT, links down below. I'll also leave a tutorial up top. I am working on a new tutorial for the new options in Prime XBT, but definitely check them out. You can trade gold, silver, oil, crypto, Forex, Dow Jones, everything all from one exchange. Super easy to navigate. Definitely check them out if you haven't already. But my promo code Savvy50 will give you up to $7,000 bonus to use towards your margin. Savvy25 will get you 25% off of your trading fees. So even if you're already on Prime, you can still put those promo codes in. All right, let's take a look at it. So let's say we topped out here, right? Let's put the fibs from that swing high up here to the swing low. And if we topped out here, where would we be looking for wave 3? So this would be wave 1, this would be wave 2, and then wave 3 down. So let's take a look at where that would be. That would be somewhere approximately around 17.1, and then probably get a wave 4 up to maybe 22.5, and then continuation down. Let's put that in there just so you guys get an idea of what I'm saying here. Where is the Elliott wave counts in here? That's not it. Bear with me. Here we go. So it's 5-wave impulse, right? So this would be 1, this would be 2, and that went to the 1 or the 0.5 fib. So it is possible that it topped there. And then we'd get a wave 3, wave 4, and then wave 5 down to that new low. Regardless, it would still make a new low right here, right? Somewhere in here. Now, could that be the bottom then and continue up? Possibly, but we're still getting a new low in my opinion here. So now let's take a look at what if it rode up to that golden pocket zone. Then the wave 3 would be somewhere in 18,000 range, and then of course get a wave 4 and then a wave 5 down. This wave 5 could be extended, right? Big time. Now this is a 4-hour chart, so this could be, you know, extended out, like I had said, into next year. But either way, still nothing has changed, guys. Nothing at all has changed. Don't get caught up in the small time frames. Of course, if you're trading, obviously, you're going to look at the smaller time frames. If you're a day trader, you're going to look at the small time frames and trade according to that. I consider that more gambling. I like the swing trade, which means you're in a swing trade from anywhere from, you know, a couple days to a couple weeks, sometimes months, right? But what I'm looking for here is obviously more downside, but there is a possibility of a little more upside like we talked about in the beginning. Now, let's take a look at DXY. It is still bullish, guys. We got a rejection exactly where we've been talking about for over a month, almost 2 months. We had this target of 106.8. I said, watch for a little rejection there, which we got, and then a continuation up. Once we break this, this is what tells me that that distribution might play out a little bit quicker, right? Because once we break this 106.8 range, we'll come up, probably maybe come back, retest, but we have our target from the break of this falling wedge right here. We take the widest point of the wedge to where it broke, and that gets us at 109. Once we get above 109, hold support, then we have the white falling wedge, right? And we take a measured move of that, widest point of the wedge to where it broke, and that gets us that 115 range. Now, I do have much higher targets. We'll see what forms here, but either way, this is still what I'm looking for here, guys. And remember, I said right now, your major supports around that 105, which is a 0.382 fib. You'll have a little resistance up here at 108.7, somewhere in that range, but either way, bullish, super bullish on the dollar, guys. All right, let's take a look at the Dow Jones. You guys know we broke down like we were expecting down here. Now our resistance is the 0.236 fib, which is at 34,000. Our support is around 30, let's say 33 even. If we break below there, guys, we're just going to continue back down. We have major support at 32.5. Expect a bounce there. May last a couple days, but nevertheless, you guys know my target from breaking out of this rising wedge is 27.7. Although I think we could go much lower in everything, guys. I think we're witnessing the biggest money grab in history. If you think so, hit 1. If you don't, hit 2 down below in the comments. All right, let's take a look at S&P. So the S&P, we have not broken out of our downward or our upward channel yet. Currently, that lies somewhere in the 42 and a half range. Once that breaks, guys, you know my next target for major support is going to be somewhere in the 37-35 area. Now, it doesn't mean it's going to happen in a day, guys, but it means it's where we're headed, in my opinion. Remember, none of this is financial advice. I'm showing you my view of the markets, how to view the markets, and you know, how to kind of read what's going to be happening. We've been talking about all this for a long time. Absolutely nothing's changed in the charts. You get, you know, your little pumps and more dumps, little pumps and more dumps. Okay, NASDAQ, same thing, guys. We broke down out of our rising channel. The target of that is 12.5. And we came back up, retested the channel, and got rejected. Imagine that. Now, gold. So let's look at gold on the weekly. As you know, I look at gold as a big hyper wave. There's a 5-wave structure. And on this 5th wave, you actually got a triple top. We've had these targets for a long time. Let's go into the date. So this is the super bad case that it's going to be a drawn out, long, hard dump for all markets, right? Could get as low as, I'm not saying it's going to get that low. I'm saying it's possible. First, you have to break through the resistance of 1450, which has been my target for an extremely long time. If that breaks, then you're looking to retest this trend line. And guys, this could go on for a long time. So either way, everything is still looking bad for the markets, in my opinion. Let's look at, where is it? I thought we had BNB up here. Okay. Here it is. Oh, wait, let's go back to gold. Let's zoom in. Sorry about that. Let's go into the daily, right? Sorry, sometimes sitting here talking to yourself in a camera, you can get kind of confused. So gold, here's the daily dumping. Where's your next support for gold? Right here, about between 17.8 and 1800, right? But I do believe we are coming down. This is my first target. Now, this target has been here for 2 years, guys. 1565. If that breaks, 1424. If that breaks, then we look at those lower targets we were talking about. Yeah, it doesn't look good, guys, at all. All these targets, we've been watching this for a year and had all these targets, or for years, and had these targets for years, and it's still heading to them. Again, nothing has changed. Put that in the comments if you believe nothing's changed. If you do, put in it has changed. And don't forget, guys, smash that thumbs up. It does help push the algorithm, helps push this video out there, and I do appreciate it. Let's take a look at BNB now. Where is my BNB? Right here. So here's that BNB chart. Remember, once we break this 202, I'm looking for 153. Once that breaks, 69. And if 69 does not hold, I think Binance is done at that point. But if it holds, maybe it'll hang out and survive. But as of right now, just not seeing it. I think Binance is in huge trouble just from what I see in the charts. Remember, guys, I don't pay attention to the news. If you're paying attention to the news, you're super bullish now. You'll probably buy the top and continue down. That's what happens. I don't know. Stick around, watch the channel. People that have and actually have patience and watch, they learn, and most of them are making a lot of money. Trading the markets both ways. Currently, we're in a bear market. I only look for shorts. That's how I trade. You can trade however you want. Just always make sure you never put in more than you're willing to lose. Put in your stop losses and use risk management, guys. Risk a little to gain a lot. Cut your losers quick. Ride your winners. Take it easy, guys. I'm out. I love you. See you in the next video. Goodbye.